Again, we had the questions, and here are actually the report from the bank very recently. But it says here as well that it's always a question: are the interest rate going to increase? Are they gonna go down? You know what? We don't have that glass bubble, or how I call it always. Like, we don't have that to really see what's gonna happen. But as they mentioned, is they might go up. Okay, so they might go up. They assume they will go up by end of this year, right? And as we had that since, or the interest rate shock in December 2021, it might happen again. Okay, so this is what it's kind of a statistics, because in the 70s we had the similar time, which was it was like worse. They believe it's not going to be that bad, but at the other hand, they assume it's going to go up. Okay, and it might come really, yeah, I believe it's going to be probably up to 6%.
They meaning Deutsche Bank, right?
Yeah.
Okay.
Yeah.
I'll show them the long-term interest rate chart.
Yeah.
You can just continue.
I mean, the good part right now, what we have, even if you're paying a high interest rate, which is right now like between, it depends on the down payment.
Yeah, so the best one was 3.6 this afternoon.
Really?
Yeah, which nobody really. It's the marketing interest rate.
Wow. Okay. I had recently a good one. It was 4 point. Yeah, it was almost straight 4.0.
Yeah, I think that's also the realistic one, because the one that is always published online is the marketing one.
Yeah, exactly. That's the one you see, 3.5%, and then you click on it, and then you submit everything, and at the end you get a 4.5%.
Exactly.
So, but what I want to say is, if you get a good deal, save that interest rate, because as even the Deutsche Bank presumes that it might go up, at least you can save it right now, right, in that market. Because some clients, they come up to me and say, Vanessa, can we do 5 years instead of 10 years? But even if you do 5 years, the interest rate is going to be way higher. And you don't do it for a strategy what is usual buy and hold, which means you're buying a property, you hold it at least for 10 years, and you sell it. So I would prefer save it for 10 years, and then you can still decide what you want to do, right? So we don't know where this is going to go. People assume it's going to go high again. And this is what I always say. Even this week, we had an increase. And we can really see a 0.3, 0.4 difference, to be honest. So before was more, it was funny. Before was more, oh, save the property, get the property kind of reserved, right, from the agent or so, and take your time with the with the financial part. But right now it's a different way. You have to be so quick. I mean, you even have to be quick in if you're having a great deal, but you have to be more quick in saving the interest rate, right? Because every day is kind of going up and a little bit down, but it's mostly going up.
Yeah, so, and right now the premium, I mean, we have an interest rate calculator on our website too, right, which shows the marketing interest rate, so be careful. It's maybe a little bit better than what you'll get at the end, but the premium right now between saving it for 10 years fixed interest, and 15 years fixed interest is not that much most of the time. Of course, it changes daily, but most of the time it's not that different. And then you can also save it for, or have a fixed interest rate for 15 years. And even if the interest rate is better in 10 years, according to German law, you always have the right to eliminate your entire mortgage contract after 10 years.
Yep.
So if the premium between 10 years, 15 years, 20 years is very little, it might make sense, what Vanessa said, that interest rates could increase to fix it for as long as you can, basically. Yeah. Because if it's better, you just cancel your mortgage contract and get a new one at a better interest rate.
Yeah, exactly. And at the end, it's tax deductible. That's a great part. That's what most people don't know. If you're getting just for investment properties.
Yeah, just for investment.
Not primary homes. You can deduct, depends on your Steuerlast, your tax level, right? So it depends, and you pay a little bit more than the half, and you can still. Yeah. So let's say you have a 4.0, and at the end you pay probably 2.3 or so. Yeah.
And that also answers the question we got on Instagram. Still worth it with skyrocketed interest rates? We brought you the long-term chart. Where's the skyrocket? Of course, this is an old chart, right? So right now we're at 3.6. But still, the chart, the point of the chart is to show you the long-term trend. And of course, it has been, it would have been a lot better to buy 2 years ago. But that's just not the reality right now. And I can't see a skyrocket. A skyrocket would be 8%, 9%, what we have here in the long-term chart. But not 3, 4% is normal, but not skyrocket.
And keep in mind, there are countries, they have even more interest rates than we here in Germany. Like if we talk to our clients, they're like between 9 and 13% sometimes. So it's still pretty good.
I mean, and inflation is in 2020 we had 0 point something interest rate, but 2% inflation. And now we have 4% interest rate, but 8% inflation. So you're actually, and we talked about this in the last one, inflation is pretty good for real estate investors, even though everyone hates it, myself included. But for real estate investors, it's the best thing that can happen. And if your premium between your mortgage rate and the inflation rate is 4%, it's actually much better than it was 2 years ago with only 2%.
Exactly. Absolutely.